We've got much more discussion on this. The financial services platform has become so much more than a platform to trade stocks. Over the past few months, Robinhood has unveiled a credit card and spending account and launched a desktop trading platform, plus added features and futures and index options trading. Now it has its sights set on financial advice. CEO Vlad Tenev spoke about Robinhood's advisory ambitions on Wednesday's earnings call.
We see advisory as an enormous opportunity, and we're going to tackle it very, very aggressively. I think we can appeal to customers that may be a little bit older, that have more comprehensive needs, and they love the digital experience of Robinhood, but would love a human advisor.
Joining us now, we've got Chris Whalen, who is the Whalen Global Advisors chairman here. Chris, great to get some time with you once again. Just want to get your read through on what you heard from Robinhood and how they're going to be leaning further into wealth management.
Well, Robinhood was one of the best performing non-bank stocks that I follow in the past year. They've been paying a lot of money for the growth. As you probably know, they were using incentives for their gold members. They've had other incentives out there for IRAs where they match contributions. So I think the question in my mind is, when we get this business to a size where we can kind of pull back a little bit on the incentives and the spend, what does it look like going forward? Can they really go out and compete with the Schwabs and the Ameriprises, who are hyper efficient, and they're also banks? When I look at this stock, it reminds me a lot of SoFi and also Block. When they got done with their growth period and we started talking about profitability, they kind of lost their allure. And I think you're going to see the same thing happen here with Hood. As they grow, as they get profitable, and we talk about earnings instead of growth rates, I think it's going to be a different story. Last thing, when I see any of these finance companies that I follow, including EBITDA and other industrial measures of non-GAAP financials in their presentations, I kind of wonder why. EBITDA is not relevant to a financial company. And yet I think a lot of them want to spin themselves as fintech, so they present themselves this way. SoFi does, many of them do.
Well, that's really interesting and important for people to keep in mind as they're kind of monitoring earnings coming in. But I wonder how you're thinking about how Robinhood can be strategic in this time of growth. What do you want to see from them next in order to maintain this growth story?
Well, if you look at the business, what's the biggest growth item? Credit cards. They are currently making a lot of money on their sweep accounts, but they have to give away a lot of that money to the banks that are taking the funds. So I think over time, they're going to have to make a decision. Do we become a bank so we can retain the entire spread? You look, they're paying 4% now for gold member deposits on their sweep program. Repo rates are north of 5. We pay banks well north of 5 in the market for collateral. So I think that over time, they're going to have to become a bank if they want to compete with Charles Schwab. It's just the way it is. This is a vicious business, by the way, competitively. And once they really become large enough to be a threat to some of these firms, you're going to see the competitive environment heat up a lot.
What do you think the probability of Robinhood becoming a bank is, and the timeline to that?
It really depends on how they want to play it. There are still some dealers out there that are not banks. Piper, Jeffries, etc. But I think if you look at the asset managers, what I call the asset gatherers in my surveillance group, they're almost all banks. And I think that because of that, they have huge earnings potential on the deposit side. Look at Charles Schwab. They have the lowest deposit rate in the country among large banks. So if they astutely leverage that, they can make a lot of money for their shareholders. I just don't know if Hood really wants to go through all that. It's easier just running a broker-dealer. But the question is, can I compete with Charles Schwab and still be relevant to investors? I wonder if they turn down the spend and the incentives, what does this look like a year from now, even if the top line continues to grow nicely? And I think it will, by the way. These are smart people. But the question is, the asset gatherer market, as I call them, which is led by JP Morgan and BlackRock, this is a tough neighborhood, guys. It really is.
So what does that mean for investors, Chris? In your view, should investors kind of ride the Robinhood rally until they become a bank?
No, I think you want to be out before them because when you're
Right.
a bank, you become boring. Look at SoFi, look at the rest of them that had to make that decision block. They've all become really boring. And even though they had a nice run last year, the whole group kind of picked up once Donald Trump won the election. To me, this story has already matured. And now you see Kathy Wood, you see some of the other smart money leaving. It's because we're not in the growth phase anymore. We're in the profitability phase now. And to me, that's not as attractive just for most of these stocks. If you look at them historically, if we laid them all out, going back 5 years, I think you would say you want to be in early and out early.
Interesting. Chris, it was particularly interesting and noteworthy to listen to how much they were talking about acquisitions and what that would mean for growing out the business as well. I know we got to leave things here, but we're going to be continuing to check in with you. Really valuable insights.
Yeah.
Thanks so much, Chris.